In this video, we are going to be breaking down how to get access to business credit by setting up the right banking partnerships, why you have some credit scores on some reports that are lower than others, and what you can do to improve your overall credit profile. So with that in mind, you guys know how we do. Let's go right into the questions that we had. Always like to start it off with the first one, which is the following. And if you're wondering where this question comes from, this comes from previous videos that we do. So if you want your question answered, go ahead and drop them inside of this video. And then we can go ahead and hand select them for future content that we have. And so this person asked, MC Breets, INC, or Realty. I always screw up these names. Do you open up a business bank account with each bank though? So if you're wondering what he or she is referring to, it is this video right here, which is a short that I did on a $300,000 business credit strategy that we did with one of our clients, which is what we do inside of our program. We help them build funding models and we help them implement it into their business so they can continue to scale their business through using business credit versus their own personal cash or personal credit cards. And so the way that you want to do this is when you are looking at a bank account that you are going to what we call establish a partnership with, you don't just want to open up any one that you see online. Like, I don't even care if it's coming from my channel. I don't care if it's coming from someone else's channel on social media. The reason why that is because every business is going to be different, and every funding, what we call funding sequence, is going to be different based on what the business is looking to do and how it's built. So there's a couple things that you want to take into account, and then I'll share with you more so how you want to set it up for yourself. So every business is obviously going to have its own industry that it is involved in. So that is the line of work for that business. So this could be e-commerce, this could be real estate. I'm assuming you're realty. So this could be a real estate brokerage. This can be a fix and flip. So maybe long-term holds, short-term holds type of real estate projects. Or you can maybe be involved in manufacturing. So that's like the first layer that I always look at whenever we're helping a client out. Second thing that we look at is the business in pre-revenue, meaning has it not generated any revenue just yet? Or has it already started generating revenue? And then the third dial that I'll look at is the geographic footprint of where that business was established. Here's why this is important. Remember what I just mentioned earlier, where if you're looking at a video, whether on TikTok, YouTube, Facebook, like wherever, you have to keep in mind that not every financial institution that person, that creator is talking about it may not necessarily be located in your state, your city, your town. And so this is why we like to use tools like Bank Branch Locator. It's totally free. You can just go ahead and Google Bank Branch Locator, and then you can type in your city or you can type in your town, and then it'll give you a list of the banks that are around you. And the way that it like categorizes it, which I enjoy, I think it's a clean piece of software. And again, it's totally free. Is it does it based off of volume. And so if you do, I'm in Orlando. So if I do Orlando, Florida, the majority of the banks that are around me is going to be the big box banks. So you'll have Chase, Wells Fargo, Truist is a bit more of a regional bank. We have Citizens is in Florida, but it's a bit further south. Who else do we have? We have PNC, which is, I would consider, a bigger bank. And so when I'm looking at that, it's going to categorize it as the majority volume. And so there's like a Chase and a Wells Fargo and a Bank of America on every corner. And so the way that you want to set it up for yourself is the following. You want to see, okay, is the bank that I am going to open up a business account with, number one is, are they nearby? The reason why that's going to be important is because if I can establish a relationship with a business banker, which is what we help our clients do all the time, you're essentially building a business banking team within your business. Similarly to how you have an HR department, or big businesses have an HR department, they have a legal team, they have a marketing team. We also like to have what we consider like a funding team. And so it's one of the things that we help our clients focus on because it makes funding at scale a heck of a lot easier. And so that's how you would want to open up those accounts based on where your business is located, the type of revenue that it's doing, and then also just don't overcomplicate it. Just make sure that the banks are nearby. Let me give you a heart just to make sure and let you know that your question has been answered. Next one that we have here comes from Joy. So she says, when her and her husband were saving for the down payment, I'm going to highlight it so you guys see the question, for a house, we had money aside for student loans to be paid off, but it was our only debt that we thought we needed to get approved. It was a substantial amount, around $30,000, yet we had zero credit. Turns out that this is desirable in buying a house. We don't owe any money. We manage our money, but the lender had to do the manual underwriting, and we were able to negotiate tons and save thousands. Yes, so this isn't necessarily a question, but it is one that I wanted to pull up. And so there are instances, if you're buying a home, where you can leverage your personal credit if you don't have any just yet, and then they can do a manual underwriting. The way that this is going to work, though, you guys, is that if they're not going to use, and I know that Dave Ramsey has spoken about programs like this before, where if you're not going to use your personal credit, then at that point, it's going to be heavily dependent on your debt to income ratio. In this case, since you don't necessarily carry much debt, it's going to take a look at, okay, do we have any student loans? And then any possible outstanding balances. So I know that for her, she maybe didn't have this, but if somebody maybe had a car balance that they had to pay off, or if they had a recurring debt, they would calculate that into the underwriting. Now, this is important because if maybe you are more on the heavy cash flow side, but you don't have the strongest credit just yet, you can leverage this method right here. But the main thing here is that you want to let the financial institution, in this case, the MLO, so the mortgage loan officer, know, hey, like, we don't have any credit. So that's the conversation that you want to have up front. We don't have any credit just yet, but our revenue is pretty strong, or in this case, our personal income is pretty strong, especially if you have, let's say, a household where two incomes are coming in. You can use both incomes because remember, at this point, it's not going to be dependent off the personal credit. It's going to be dependent off of the income and then any debt that is possibly, and again, when I say debt, I mean recurring debt, or in this case, like a big installment debt, like a student loan. Now, one more thing that I'll say on this, and again, kudos to Joy for bringing this up, is if you have a bigger debt, sometimes they'll require you to either pay a lump sum off at the closing table before they can finalize the loan, or they'll say, hey, you'll have to finalize whatever that debt is, and you have to satisfy it, and then we can go ahead and give you the CTC, so the clear to close. So kudos to you on that, Joy. Really cool stuff. Let me give you a thumbs up on that, let you know you were answered. Paul says a FICO score factors in debt to income ratio, but rental history doesn't. That's like looking only at one piece of the puzzle instead of the whole picture. Which, by the way, I agree. As a result, lenders are forced to take on greater risk, which ultimately leads to higher interest rates or more loan denials. Yes. So again, not necessarily a question, but it is something that I found quite interesting, where when you are looking at a rental property, and this is for yourself, not for the investors, this is for you, that's not going to get included into your FICO score. I did a previous video on that, but I'll reiterate it again. That's going to be more on the Vantage 4.0 model, which is what's being looked at right now when somebody's purchasing a home. And so again, one of the ways that you can combat possibly having your rental get reported onto your credit is by using a subscription kind of like Rental Karma. Because there's a couple of different factors that go into when you're buying a home, and there's a couple of different factors that go into even when you are trying to get access to a business line of credit. So for my business owners, this piece is for you, and then for my people who don't own a business, this is for you as well. They're always going to take a look at your payment history. And when I say that, I mean financial institutions like banks, credit unions, what have you. And so they're going to take a look at two key factors inside of your payment history. They're going to take a look at how you've been managing the personal debt. So have those payments been made on time? That's number one. And then what's the total usage that we have? Meaning if we have $1,000 line of credit and we've used up $500, that means that we have a 50% utilization. Ideally, we want to always try to keep that under 30%. Now, obviously, there's instances where you have to use it, emergencies come up. Obviously, use credit responsibly, and it'll come up above 80%. But we want to bring down that threshold, especially when you're in the process of purchasing real estate, whether it's for yourself or for an investment, or when you're in the process of trying to acquire capital for your business. Because the payment history and then also the payment usage that you have on the personal side makes up right around 65% of the score. So it is the two biggest levers that you can pull on if you want to increase your credit score rapidly. Next up comes from Dave. Again, this is more of a comment, but I did want to kind of like add some additional context to this. People need to do all they can with their credit score. People need to do all they can to protect their credit score. 24/7 monitoring and alert notifications are a must. I 100% agree with you. The damage that can be done by fraud and identity theft cannot be undone. The small monthly fee for Experian gives me a peace of mind. So he uses Experian. So Dave uses Experian. You can also use my free score now. That's linked down below. And then we also use with our clients, we also use Smart Credit as well. But you can also use Experian. The main thing here, it's a small monthly fee, ranges anywhere between, depends on the package that you get. With all of them are priced about the same, anywhere between 19 to 39 bucks a month. If you want the higher end sophistication, really you're good with 19 to 29 bucks a month on your credit monitoring service. The main thing that you want to pay attention to is you're getting your updated reports every single month, especially if you're in the process that where you're either cleaning your credit or you're in the process of you're going for business funding. It's one of the things that we tell our clients. So whether they're cleaning their credit or whether they are already ready for funding, we want to know what's on the report at any given moment. And so make sure that when you use either of these tools, either of these softwares, we actually have one that gives us all three of the credit bureaus, not just one, because I want to know if something's reporting on one, why isn't it reporting on the other, and vice versa. And then the second thing is it does give you peace of mind because you do get alerted rather quickly. If all of a sudden you see an account that gets opened, or all of a sudden you see a hard inquiry, or all of a sudden you see a purchase, a transaction that was done that you didn't authorize. And so the way that this differs from just using the regular banking software, which is good, like you can, like if I have right now an American Express, they'll tell me, did you try to make this purchase? Yes or no? And I put yes or no. But sometimes you want to stay ahead of it by having two types of tracking. So you have your traditional tracking that comes in directly from your bank, and then you have one that comes in from the bureaus. The one that goes on the bureaus is super important because that's what's going to impact positively or negatively your credit score, which is why I like being able to monitor with different sources. So kudos to you on that, Dave. Good point. Laureen says, this is a really good question. So we have one credit score. The other two credit companies show low. So one credit score is high, one credit score is low. I pay on time, no late credit, no loans. I have my house payment, medical bills, 49 surgeries. So pay a lot. What should I do? Can't wait for the change. Been working so hard, trying to keep it up. So she goes on to say that medical debt shouldn't count, which again, we've discussed that before on the channel. I paid a medical bill off $114 in July. Then the collection complete letter sent that I owe $114. Okay, so I called them and they said they'll look into it. It's almost September 1st. No reactions on the report. Dropped 21 points. Okay, so if I'm understanding you correctly, if you have already paid your collection, or in this case, a medical bill. So if it was already paid and you have proof that you paid it, what you want to do is you want to contact the collection company, let them know, hey, I've already paid this. Here's the proof. This is negatively impacting my credit report. And then you also want to send that to the credit bureaus. I don't think you put it on here because you said one's high, one's and then two are low. So you also want to send that proof that you paid it to the credit bureaus. You want to draft up a letter essentially stating, it doesn't have to be perfect, but essentially stating, hey, one of my credit reports, and you attach that credit report on there, is showing that this bill isn't reporting, that it's been satisfied. The other two, though, and then you'll rinse and repeat the process. So I'm going to use the example. Let's say Experian and Equifax are the two where it's reporting lower. You would send them the payment receipt, and then you would also send them a copy of your other, so let's say TransUnion, of your other credit bureau showing and highlighting how it's not reporting on there, letting them know this is affecting me from being able to, whether you're looking to make a purchase, whether you're looking to maybe get a loan for a big project you have coming up, like whatever it is, you could just insert, this is holding me back from being able to insert what you're looking to do, insert outcome. And so you'll send that out. Hopefully it updates. The thing that you have to remember, and this isn't just for Laureen, this is for all of us, is credit cycles move extremely slowly. Bank cycles move extremely slowly. And when I say extremely slowly, I mean 30 days. So it typically takes 30 to 45 days before you can see any type of changes inside of your credit. So I was just having a conversation about this with a client of ours yesterday who's almost there when it comes to applying for funding. So, and this is for a business owner. So he's just waiting for one late payment to come off, which he's already been notified through the app that it's already been updated. So he sent out a letter, that late payment is coming off. And so at this point, we are just waiting for one of the bureaus to remove that late payment so that we can go in and get access to business capital for his business. Now, that alone takes about 30, 45 days, which is why you want to be a little bit more patient, but you can get ahead of it by calling the collection company first, letting them know, hey, I've already paid this, what's going on? And then also getting ahead of it with the credit bureaus and sending them that letter as well. And then I believe that the last one that I had was this one right here. I got denied for a credit card a few weeks back. An old account was closed about 5 months ago because I hadn't used it in a few years. My credit score is 810 and I got denied. I was shocked. Yes. So we'd have to take a look at the profile as a whole, because the way that I look at it is it's not just about the credit score. It's about the overall credit profile. And I've mentioned this before in other videos, and I'll go ahead and say it again. So when you're looking at a credit score, the credit score is kind of like somebody's body weight. And then the credit profile is like the overall blood panels. It's the best way that I can describe it. So if you have one person who is 200 pounds and then you have another person that's 200 pounds, that doesn't necessarily give us the full, let's say they're both males, they're both 45 years old, that doesn't necessarily give us the full breakdown of somebody's health metrics. And so you could have that one, let's say 40-year-old who is 200 pounds, and they run every day, they walk, they don't smoke, they drink maybe one glass of wine a month, and they watch their diet, as an example, and they keep their stress down to baseline. And then you have the second person, same weight, same age, but they maybe smoke a little bit more than they should. They're maybe getting 3 hours of sleep. They maybe work 5 jobs. And so obviously the 200 pounds there is going to be totally skewed in terms of who's actually healthier. So the reason why I say this is because even though we have an 810, I think, yeah, you said 810 credit score, an 810, if we don't actually know two things. Number one is how many revolving accounts do we have? So that'd be the first thing. So do we have at least 3 to 5 revolving accounts on the profile? Because that's how you start to create what the bank considers, what the bank considers a thicker profile. And then the second thing is, do you have some type of mix? So do you also have installment loans? So do we have a house? Do we have, that would be considered an installment loan? Do we have a vehicle? Are there student loans that you're paying off on time? And then the third thing, which you hinted at there, is you had an account that was closed out because you hadn't used it. And so unfortunately, like, credit is one of those things where if you don't use it, you lose it. And so even if it's something as small as, let's make an example. Let's say that all of my credit lines were $10,000 a pop, and I only had one credit line that's like $200. That's a big difference. Rather than just saying, hey, it's $200, what am I going to do with $200? Even if you put a small, maybe 1 to 2 subscriptions on there, maybe like a gym membership, maybe $10 a month, and then maybe like a Netflix type of subscription, just something small, just to keep it churning. And then obviously you're making that payment on time. It's really going to do 2 things for you. Number one, most importantly, it's going to keep the account open. And then number 2, just an added bonus would be a credit increase. Now, if we wanted to take it to the next level, if I was speaking to a business owner, I'm not sure if you own a business or not, but if I was speaking to a business owner, that would serve as a bridge for potential business credit products. So if later on with that same financial institution, if I wanted to go back in and get access to a 0% business credit card, maybe an SBA product, maybe a business line of credit, maybe finance some equipment through them, sometimes people think that they need to have these large amounts of capital already established with a bank or with a credit union, when sometimes all it takes is having a traditional business bank account with them open and or some type of product. I've used the example before and I'll say it again. The main bank that I have right now for my business is one that I had a college savings account for. And this bank has treated me extremely well. And I've had that relationship with them for some time now. So that's how we would set it up. But hopefully that answers your question. If you are a business owner and you're looking to get access to business capital by installing and setting up a simple funding setup, we'd love to connect with you. Go ahead and DM me the word ready. I'll go ahead and also pin it down below in the comments. DM me the word ready on Instagram so we can see where you're at and see how we can help you get to where you want to go. If you don't own a business, I'm also going to attach a tool that you can use to continuing monitoring and cleaning your credit down below. Feel free to ask your questions down in the comments so we can answer it in future videos. But other than that, I will see you guys in the next video. Bye.